Hi, morning everyone. Welcome back to our morning cup by 8 with Aiman right here. Okay, so looking at the S&P 500, well, it pulled back slightly on Thursday's session, easing around 0.38% after the strong rally recently, right? So overall sentiment remains positive, but the market is starting to see some consolidation near the record high. So I believe that this was due to the profit taking in those tech and also AI related stocks as investors lock in a profit or gains following the sharp upside seen over the past few sessions, right? So also at the same time, sentiment was also affected by the raising concern over valuation and also interest rate outlook, especially after the recent economic data suggested that the US Fed keep the rates higher for longer, right? So despite the recent decline yesterday, right, the downside remain relatively limited, right? As overall sentiment is still supported by the positive macro outlook, right? So coming into next week, I believe all eyes on the inflation data to gauge the interest rate going forward and assess the market movement into the following weeks. Right. So if you look at the China E50 futures, well, it dipped somewhere around 0.37% on Thursday's session, with the market turning slightly weaker after the recent strong rally. Right. So the pullback was mainly driven by the cool off of the market after the recent breakout of this consolidation zone, as the index had rallied strongly in the past few sessions. So also the sentiment was also affected by mixed regional market performance and lingering concern over the US-China relation. However, I think despite yesterday's decline, the broader trend still um, uh, look relatively constructive or supportive, right? As the market continue to stay supported by expectation of the policy support and improving risk appetite globally. So theoretically, uh, in the technical textbook, I think this move appear to be healthy as it form a higher high market structure, right? So, looking at the WTI crude oil futures, well, it rebounded somewhere around 1.45% on Thursday, recovering part of the sharp losses from the previous session. So, overall sentiment still volatile, right? And the rebound was mainly supported by renewed concern over the supply risks in the Middle East. And also, bargain hunting also emerged after the recent 7% sell-off, right? With traders taking advantage of the lower prices to re-enter the market. So we're also seeing support from the stronger than expected US fuel demand data and declining crude inventories, which help to improve the short-term sentiment of the energy market. However, I think on the technical side of things, the market has formed a hammer pattern yesterday at the support, which indicates that the rebound should follow through in the coming session. But do note that if you take a look at this MACD indicator right here, the MACD is now crossing below the signal line level, which tells us otherwise, lah, right? And looking into our Malaysia market, well, the KLCI closed slightly higher, around 0.1%, while the FKLI outperformed stronger gains, about 0.37%. So overall sentiment was positive, with futures showing better, I would say better momentum as compared to the cash market. So buy interest was seen in several index-linked heavyweights, particularly in the banking and also the utility sector, right? Helping the index to stay in positive territory despite the mixed broader market participation. Yeah, I think also yesterday BNM decided to keep the OPR rate steady at 2.75%, which largely within the expectation of the street expectation, right? So yeah, a stronger move in the FKLI suggests that the traders are still positioning for the near-term upside potential, with short covering also supporting the future sentiment. Right. However, gains on the KLCR remain relatively modest as the investors are still cautious on the external environment, especially surrounding the global growth outlook as well as the geopolitical development as well, right? And I think overall, yes, this session reflects stable but selective risk on tone rather than aggressive bullish buying. Um, yeah, so also I received a question regarding this Nestle counter on the technical direction. So if you notice, right, the price has formed a base recently, which I believe it is has formed a strong demand zone right here. So following the breakout, right, the pullback, I mean the price has pulled back to the previous resistance zone, and this is a bullish continuation pattern of resistance become support. Also, it maintained above this 21-day SMA line, which is the gray color. So theoretically, this is the initial, I would say, initial first wave, right, of the bullish move. And if we were to project the movement using Fibonacci projection, we will get a few significant levels of 106, which is the first resistance. The second resistance is 108. The third one is 110, 0.710, right? So yeah, the blue line that I draw right here is the movement that we should expect should the bullish momentum intensify, lah, right? Or we call it as a higher high market structure, right? So moving on to the Mr. DIY. Yeah, so same goes to this Mr. DIY. It has rebounded from the resistance become support zone, right? Also, recently we published a report on this, and I think the counter has now broken above our second resistance level at 1.70 cent. So should the resistance become support zone holds firm, right? We should see that the counter to hike up higher to test the the 1.80 cent level in the coming session. Right, so yeah, this is a better picture of resistance become support, which is the bullish continuation pattern on the right side, right? And on this left side, right? So this is the support become resistance pattern formation, which is a bearish continuation pattern. Right, so moving on to our Malaysia trading stocks. So today we have UWC, right? So the stock is on its breakout formation at 545 cent level on a strong volume. With that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance at 580 cent, followed by 615 cent level. So if the stock to clear below 510 cent support, this could reverse course and trend lower. And next, we have Allianz Malaysia. So the stock is experiencing a pending breakout at 21 ringgit and 50 cent level. So if the stock to remain bullish, we expect the price to reach to 22 ringgit and 30 cent, followed by 22 ringgit and 80 cent for the second resistance, together with the high volume, right? And also do keep an eye at this 21 ringgit for any attempt of reversal. So today we have one breakout stocks, which is UWC, and one pending breakout stocks, which is Allianz Malaysia. And lastly, for the FCPO, well, it continued to move lower on Thursday session, declining around 0.9% as the selling pressure persisted throughout the session yesterday. So I think the overall sentiment remains weak, with the market still in a corrective phase, right? So this was due to the concern over slow export demand from the major buyers, like you know China, India, right, are also weighing on the sentiment, especially as the buyers remain cautious at this current price level. So I think on the supply side, expectations on the improving production, also raising inventories in the coming months continue to limit buying interest. and kept any rebounds to them, right? So, but still we keep our positive trading bias unchanged unless it crosses below the 4,500 stop loss level. And technically, it is still in a bullish setup and still trading above the 50 and also 200-day moving average, right? So I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Okay, thanks, Aiman. Yeah, let's move on to Sime Darby Property. We recently have an engagement with the senior management team. So we are still very much confident with the company's growth prospect. We like the company for its diversified property product portfolio, expansionary pool of investment assets, as well as innovative funding platforms for certain upcoming strategic development projects. So all these are expected to drive long-term growth while also mitigating earnings volatility. Management continues to pursue long-term growth and without over-leveraging the company's balance sheet. New development funds will be set up to undertake more institutional-grade developments, including retail, commercial properties, student accommodation, as well as data centers. While development and also fund management fees will be minimal upfront, Simeprop will likely benefit from disposal gains upon injecting the project into the fund. And upon maturity of the fund, Simeprop will be able to reap more sizable profits from the projects. As for the data center side, the first core and shell is already completed, and leasing income from this first DC should kick in from this month onwards, and hence, in the coming second quarter results in August, we should be able to see some maiden contribution there. And this also marks the start of the 20-year lease worth 2 billion. We believe this, together with some industrial assets, will form the REIT portfolio. Management is currently going through the regulatory approval process. Still, 4 billion sales target unchanged for the year. Management indicated that the demand for property products remain relatively resilient so far, despite the market headwinds. And thanks to the company's strategic exposure to township projects as well as industrial park developments. Landed homes are primarily the bread and butter products for Simeprop. We also like the exposure to industrial developments, as MNCs are expected to decentralize their operations and storage facilities to manage future disruptions in the supply chain. The prolonged US-China trade war, COVID-19 pandemic, as well as current Middle East geopolitical conflict are the demand catalysts for industrial products, and Simeprop is well positioned to capture this trend. In terms of cost pressure, management addressed investors' concern over the rising or higher diesel price, which should result in rising construction costs. And this is especially true for ongoing projects that is less than 80% completion. So in Simeprop's ongoing contracts, clauses of variation of price, VOP, will make up about a small portion of construction costs, and the overall costs are still very much fixed at the contractual sum. So overall, we are cutting our target price and also earnings forecast slightly. For FY26 to FY28, earnings forecast is down by 5%, 2%, and 1%. And hence, and this is to reflect the impact from the geopolitical conflict in the Middle East. The stock is still our sector topic. Our new target price is at 2 ringgit and 15 cents from 2.33, based on the larger discount to RNAV of 30% from 25% previously. We are maintaining our buy rating on the stock. Let me stop here and pass to the next speaker. Thank you.
Okay, thank you. Thank you, Aiman and Godwin, for the presentation. And now let me just share my screen. Okay. So yesterday we have issued a report on Cloudpoint Technology company update, as they have an announcement. Okay, so Cloudpoint is looking to acquire a 100% stake into CX1 for 16.8 million in cash, strengthening its positioning in AI-driven enterprise solution and completing its digital transformation ecosystem for its clients. So this deal translates to 7 times FY27 FPE based on a profit guarantee of 2.4 million in FY27, which is below Cloudpoint's trailing PE of 20 times. So CX1 specializes in unified communications, omnichannel contact center solutions, AI chatbots, and customer engagement platforms, which complements Cloudpoint existing strengths in networking, cybersecurity, cloud, and AI services. So the acquisition also provides cross-selling opportunity across both parties' enterprise customer bases, particularly within banking and large enterprise segments where AI adoption and customer experience transformation are accelerating. Management also highlighted that contact center transformation represents one of the earliest and most practical AI adoption use cases among enterprises, driven by growing demand for automation, operational efficiency, and enhanced customer experience. So, we are positive on the acquisition as it enhances Cloudpoint's exposure to higher margin and recurring revenue streams, while expanding its AI monetization capabilities. The deal is further supported by a cumulative profit guarantee of 7.45 million over the next 3 years. So to be exact, is 2.35 million this year, 2.4 million in FY27, and 2.7 million in FY28. Which helps mitigate any execution risks if there's any. So the CX1 acquisition not only expands its technological capabilities into AI-driven customer engagement solution, but also enhances its ability to participate in enterprise broader digital transformation spending. With rising enterprise demand for AI automation, we believe the enlarged group will be well positioned to capture larger size deals, improve recurring revenue contribution, and unlock larger term earnings growth. Okay. So we do not make any changes to our earnings forecast and TP pending completion timeline confirmation, as it will affect the exact amount of this profit guarantee. So we retain our buy call given Cloudpoint's attractive 9.3 times FY27 FPE and near 4% dividend yield. Okay. That's all from us today. Thank you for dialing in for today's morning kappa, and we hope to see you guys again next week. Thank you.